Hello and welcome to another Macro Insights video from Bell Direct. I'm Grady Wulff, Market Analyst with Bell Direct. As market volatility and investor sentiment has been hit very hard lately by tariff concerns in recent weeks, let's explore what tariffs actually are, how they work, how they impact Australian businesses, and what this all means for your portfolio. Trump announced a blanket 10% tariff on all Australian exports bound for the US just recently. Let's first understand what is a tariff. A tariff is a tax on a product imported from another country, which for Australian products heading to the US is now in the form of a 10% tax to be paid on goods imported into the US from Australia. What is the aim of a tariff? Well, a tariff is imposed to protect domestic producers by prompting consumers to purchase the goods produced domestically instead of foreign-made goods, which prior to the tariff imposition may have been cheaper or better value for money. You may be asking, but who pays the tariff and who wears the tariff? Which is a very good question, as this often is misunderstood and depends on the origin of the good produced. The company importing the good will pay the tariff. So, for example, if I produce a kettle or kitchen appliance, like some of our listed companies, and I sell it to Walmart in the US, Walmart will have to pay the tariff for importing the Australian produced good, not me as the producer of the kettle. From here, it isn't ideal for Walmart to be buying the foreign good at a higher price, so a few events may play out as follows. Firstly, Walmart may increase the price it charges to consumers for the kettle to recover the additional tax it has had to pay. This may reduce demand for the kettles, and consumers may then change their preference to cheaper, locally made kettles as opposed to my Australian-made kettle. For competitive markets, a reduction in purchasing Australian goods by US importers is not ideal for demand and sales for the Australian company. So, to ensure demand is maintained, the Aussie producer may reduce their prices to remain competitive. The price reduction is also not ideal for Australian companies as it eats into profit margins, but it does ensure products are still sold to the foreign market. Therefore, the company has to weigh up whether it will reduce prices and is willing to reduce prices to maintain sales in that foreign country, or if they wish to maintain prices and redirect sales to other regions. But for products that offer a niche product to the US market where competition is low, we often see the end price of the product raised, so the consumer wears the tariff cost, not the importer. This may not impact demand at all, as few players operate in the market to service consumer demand. For the companies that choose to reduce or even stop sending goods to the US, we may see prices of goods rise, like KMD Brands, the owner of Rip Curl and Kathmandu, announced this week, as the company attempts to maintain margins amid reduced potential sales by cutting off US sales. On the broad economic level, what is the impact of tariffs and why are markets being hit so hard right now? With price rises in the US as importers pass on the tariffs to the end user, being the US consumer, this increases inflation in the world's largest economy. Rising inflation eats into the growth and stability of the US economy, which could see a greater number of rate cuts out of the US Fed to maintain some form of stability, or we could see the US dive into a recession. As for what this means for Australia, we could see the opposite happen. With less goods being sent to the US market, we may see an influx of goods hitting the Australian market, which decreases the price of such goods as supply begins to outweigh demand, thus leading to prices of goods falling, prompting consumers to buy more and producers to reduce output to maintain margins. Overall, the implication of tariffs will have a broad impact on local businesses, US importing businesses, and the end US consumer. The market sell-off of late has simply been due to lack of certainty of the exact impact of tariffs on company growth, which companies will be hit the hardest by the tariffs, and how companies will respond. With uncertainty on the macro level, investors have been flocking to safe haven assets as we await some stabilisation and clarity on the way forward. I really hope this video helps you to understand what is going on in the markets right now, why tariffs are moving the markets, and helps you exactly understand what tariffs mean for you.